I've had a long career in banking, and last 6, 7 years, I've been doing more real estate work. But residential real estate has been my area of interest throughout my life. But as you can see there, I've been a CFO at HSBC, been in a lot of industry committees, been know how banks run, how APRA runs, how Reserve Bank runs, I think, because I've had a lot of connections with them over the years. Hopefully, then I can give you some insight in today on the economy and where I think things are heading. So first and foremost, I'm using this to illustrate why people need to be in residential real estate. If you look at the asset classes here, by far the biggest is residential real estate. Then we've got Australian super. We talk a lot about super. It's nowhere near the size of real estate. The stock market is 3.1 trillion, again about a third of the residential market, and commercial much smaller again. The important figure here, and I think a lot of times not talked about, is the actual debt, right? So if you look at the debt on the right there, let me just close the screen. So we got 2.3 trillion debt, but the value of the houses is 10.7 trillion. What that tells us is there's quite a significant amount of people who've got equity or their houses paid off. Okay. So that's an important number. Most of this debt is with the big four banks. Okay. So if you're not investing in residential real estate in Australia, then you definitely do not want to generate wealth, because that is the place to generate wealth. Okay. Now, this slide, probably some of you may have seen it before. Nanette obviously seen it many times, but I won't go through everything on this slide. But this is my 7 top factors in order of what moves the price on properties anywhere, not just in Australia. Okay. So what moves the needle on property prices? Number one is supply versus demand. And I haven't changed this slide for at least 7 years. And when number two happened, so interest rates started going up, everybody just jumped to the conclusion that property prices are going to fall. Nobody focused on the fact that supply and demand is a major issue. So I have been writing articles in certain newspapers and have always been looking at my top 5 factors, and number 6 is important as well, as to where prices are going to go is not determined by one thing. It's not just determined. Interest rates is important, and it means affordability is impacted if it goes up. But the important thing, and these 2 factors are very, very important to determine what happens to interest rates. But if you got no supply and plenty of demand, any commodity, anything out there, prices are going to go up, okay? And vice versa. So this has to be number one. And that's been proven, very well proven actually. And Perth market is probably a good one to look at. It's the supply and demand issue that is causing the prices to go up and up and up. So then interest rates, then the regulator can tweak things, with lending policy. APRA being the main regulator for banks. RBA not as much, because RBA just looks after monetary policy, which is mostly to do with interest rates, whether they're going to put it up or down or leave it as it is. The fourth one there is the most important thing with property prices is your economy needs to be strong. So you need growing economy, GDP, you need unemployment to be in check. So unemployment, and we'll see the numbers in a minute. Unemployment is quite low at the moment, okay? Anything around that 4.2, 4.3, keep in mind that 3% of people just don't want to work, right? So if you're around that low fours, then you're almost like full employment, yeah? We were as far down as 3.5, and there were like more jobs than people looking for jobs. So So we don't want to be in that type of inflationary situation where it's more people looking, more jobs than people looking for jobs. But somewhere around that 4.5 is a healthy place to be. You'll see a graph in a minute and where we were before COVID. Number 5 kept number 4 in check. If the government did not do so many infrastructure projects, did not provide all the incentives they did during COVID, and they stopped spending money in doing the things that they're doing, then you'll find that GDP and unemployment will suffer greatly. So the government, whichever government you favor, both of them have done a reasonable job at spending money and making sure there's plenty of jobs and so on. And the last one there is very, the sixth one there is very important. And I was reading an article actually earlier today. Another Northern Hemisphere country person, US-based economist, has said that the Australian property market is overvalued and it should be falling by about 50%. I have been in Sydney for 42 years, and I've been listening to these stupid economists, if I can say that, from the Northern Hemisphere countries who were clueless about the Australian market, keep coming out and making those comments. Whenever you hear anybody talk about those type of comments, even if they say 20%, the most important thing to look for, firstly, is unemployment and where that is. GDP, where's our economy? Are we in a recession or is the economy growing? And then you start looking at other things. This delinquencies, what it means is that if you do not pay your housing loan for 1 month and then 2 months and then 3 months, then your loan becomes delinquent. And the bank normally after 3 months will come and repossess your home and do what's called a mortgagee in possession sale. And you don't see many of those mortgagee in possession sales at the moment. The important point I will make here is delinquencies or loan write-offs in banks at the moment is lower than it was before COVID. Okay. So we know where interest rates were before COVID. They were lower than where we are now. Okay. And we know how far down it actually went as well, the interest rates. We were writing fixed loans at 1.9%. So if you don't see too many delinquencies, which means people not paying their loans off, then we've got a problem. Now, people in Australia always pay their loans off, housing loan. Okay, be very careful with my words, housing loans. There's this ethic in Australia, okay, and I think it's part of the Australian culture that people pay their mortgages. I've been in banking and looking at mortgage delinquencies for half of my life. And I can tell you that there's nothing to talk about because it is less than normally 1%. So banks do not have much write-off in delinquencies. Even if there is a mortgagee in possession sale, people, if the bank does an auction on possess your house and does an auction, if nobody turns up at the auction, right, then you know you've got a problem. Because at a mortgagee in possession sale, normally more than double the amount of people will turn up and they will be bidding. In today's market, I can assure you, they will go there and look for a bargain because the bank just wants to take their whatever they're going to get. So people go there and look for a bargain. Right now, if there was a mortgagee in possession sale in Perth, I'm sure there'll be 20, 30 people there, and it will probably get a higher than market price because of the market we're in. So unemployment has to be somewhere around that 7 to 8% before you are going to see a lot of delinquencies. And unemployment is at 4.2, 4.3, even at 5. It's not an issue. People can get a job. People can get 2 jobs right now and pay their mortgages. So that's important to have a look at. So these silly people will keep making their comments and you need to just ignore them. Global factors have a part to play. So for example, if foreign exchange rates come down, you might see a lot more foreign investment in Australia, okay, and vice versa. If equity markets fall, okay, in America, equity markets fall substantially in America, like we saw at when the global financial crisis happened, then equity markets in Australia will follow suit. And if that happens, then people start feeling poorer, and that will then impact the price of properties. Okay. So these factors do all have a play, but the first three there are in order. First four probably are the most important. Moving on, and I won't go through all of this other than to point out that inflation is starting to come down. US peaked at 9.1, they're at 3 now. We peaked at 7.9, we're at 3.5 now. Okay. And UK is one of the Western world countries who've now gone into that 2.3 area. We want to be between 2 and 3. And they've started to cut rates now in the UK. Okay. What we've got this is the negatives on property. This is the positives. Okay. Property prices, that is. So down here, we've got to watch very closely the recessionary fears. No one is really there at the moment in terms of recession, okay? Because it doesn't feel like a recession when everybody's got a job. And then you've got to watch Europe as well. So these are big markets we've got to watch, and China, one of our biggest trading partners, we've got to watch. On the right side here, the positives, unemployment rate is at low levels. We have a resilient economy. We have a lot of people coming into the country. That keeps the property price in check, and you've seen the rentals going up and up. And our GDP, yeah, nothing to write home about. It's sort of come back again, and we'll see a graph in a minute. But the main thing here is we're still facing a rental crisis. Vacancy rates are falling, huge shortage of dwellings. The supply and demand issue is there. It can't be solved overnight. That's the most important thing, okay? Now, interest rates, we've had these periods here where we've had tightening. This is like going back to 1990. There was one tightening here, one tightening here, one long period of tightening there, and one tightening there. So since 1990, we've had these four tightenings, and then there's a big fall here all the way, and then, of course, this is the blow up of that. Then that's the next tightening here. Okay, that's the next big tightening. So this one here is actually sort of that one there. And then you got the big tightening here, and we're now at 4. I want to make a quick point here. If people today think interest rates are too high, they should look at what the average cash rate was since 1990. It was 5%. So the average cash rate since 1990 to now is 5%. And where's the cash rate now? 4.35. So is it something we should really worry about? Not really. Why are we making so much noise about interest rates being so high? Is because it went up quickly and people started getting used to paying 2.5%, which never happened in our whole history. There was only a short-term phenomenon with COVID. So because they were paying 2.5 and now they have to pay 6.5, it's a big deal. It really is a big deal. But when I paid 17.5 here for my first property, okay, that was a big deal too. But so it's all relative. It's all relative. We want the cash rate to be here between 2 and 3. That's where the RBA wants it. Okay, this blue line. Are we too far off from there now? Not really. Not really. Okay. So just make that point there. Now we did talk about GDP growth. GDP growth is an indicator of how our economy is going. We have got a close shave here. We were negative here. This was COVID, but we've been treading this narrow path the Reserve Bank governor talks about. The narrow path is you can see the narrow path here. They are increasing interest rates, hoping that, crossing their fingers and toes, and hoping that GDP growth is still positive. Well, the next figure could be a minus 0.1 or minus 0.2. It's possible. Why could it be possible? Because GDP per capita is already negative. Okay, it's already negative. So is it a good thing if we get a negative quarter of growth? I think it is. I think it is because what that will do is it could prompt them to drop interest rates. Okay. It's one of many factors. It's not the only factor, but it's one of many factors. So I won't dwell on these graphs. Inflation. So inflation, as I said, it peaked here and then it's been falling. Been falling, falling, falling. This is sort of come back down again a little bit. So come back down a little bit. Okay. It's now sort of below 3. Sorry, it's below 4, so 3.7. It's sort of my apologies. My apologies. So we need that to come down to below 3. If it comes closer to 3, not too far off now, come closer to 3, we've got a good chance of interest rate falling. Okay. But the trajectory is going the right way. This little blip happened here, but it's mostly going the right way. What are the factors causing the inflation to be stubbornly high? One is tobacco. It's the highest thing there. Fuel prices are coming off now, so that should help. If it stays where they are now, the crude oil is now about $72 US. That's a good place for it to be. It was as high as 110. Insurance costs, I don't know why they keep putting it up. Rent we know about. Electricity, we blame the current government. These ones are just price gouging, I think. So there's a number of factors there in the CPI, and the government is trying to do their part to bring it down and throwing some money at people, which is a double-edged sword because you throw more money at people and cut their taxes, then they go and spend some more money and the inflation goes up. So we need all the ducks to line up so that it becomes closer to 3. Now, this is another important one, unemployment I talked about. So pre-COVID, over here, pre-COVID, we were above 5. Everyone's forgotten because nobody was focused on it before. But we were above 5. Then, of course, it spiked up, and then it's been falling since then. This is an excellent sign of a very, very, very robust economy. Okay, with so much happening post-COVID, you would think, and so many businesses crashing and so on and so forth, you would think that unemployment would be actually high, would be somewhere at least there, but it's down here. So we're hiring people. We've hired so many people, and keeping in mind that the borders open and so many migrants have come in the last 12 months, it's still below 4.3. So it has to go up. I mean, it can't stay there. It just can't stay there. We can't create so many jobs. So you are going to expect this to track, in the next 12 months, you're going to expect this to actually track closer to 5. And that's not a bad thing. It's not a bad thing when it helps bring the interest rate down. Anything that helps bring the interest rate down, for me, is not a bad thing. At the moment, we're all going to try and sell properties. So that's unemployment. So I talked about supply and demand. Where is the demand coming from? Okay. Demand is coming from a number of places. The first one is the net overseas migration. We had a bumper year here, bumper. Okay. And then once the borders open, everybody booked their flights and started coming here. And then it's still pretty bumper over here. The prediction is that it's going to stay pretty high. We can't drop this. We can't drop this. We're going to be 300 to 400,000. It's going to be in that space. We can't drop it for a number of reasons. I mean, that's a topic for another day. But we need people here to come here and pay taxes because we got an aging population, and we got to pay pension for 300,000 people every year. We've got to pay pension. It's increasing every year by so many people, like 300,000 people. So government needs that money. Otherwise, they can't pay the pension, and they might have to increase the retirement age even further. Then there's money coming from China. They're by far the biggest foreign buyer of properties here. New thing is happening is Japanese people are coming here as well. Okay. We are a very popular place for people to come to, as you will see here. So in terms of millionaire migrations, and where the very high net worth people are leaving, they're leaving all these countries here, China, India, Russia, UK. Where are they going? They're coming to US, they're going to Canada, they're coming to Australia, they're going to Singapore and UAE. UAE is the hottest property market in the world at the moment. For a small place, they have a lot of people, not just the very high net worth people, but also just people who've got some money and they can buy an apartment, and they make it tax free. They give you a lot of incentives. They want people basically to come and live there. There's no major visa requirements to go there. So we're a big benefactor of rich people coming here. And when they come here, they bring money and they spend, and somehow that actually helps our economy. That 0.1 you saw by the skin of your teeth, sort of, we are still positive in the GDP, but can't continue. Can't continue. There is pain points in our economy where I think we're gonna have a negative number very soon. Maybe the next quarter's number would be negative. I'm hoping it is. Then we get students. Anybody wanna guess how many students we get? A lot. A hell of a lot, actually. I'm sorry, they don't all go to Western Australia or South Australia. Most of them come to New South Wales. So 609,000 students, which is a very big number when our population is only like, 24, 25 million. So it's a very, very big number. And they move the needle certainly on the rental prices, okay? This is where they come from: China, India, Nepal, Colombia. Hey, Philippines. There's a lot of students coming from Philippines as well. So you can see the top 10 there and where they come from, okay? They do move the needle on rentals. That has impact on property prices and other things as well. Another very important thing is the supply and demand thing. Again, the supply issue is a problem. This is where supply is heading, the blue line, okay? And this is where the demand was very, very high. Now demand is sort of coming off, but this gap is still huge. It's not going to be fixed in the next 1 or 2 years, okay? And we'll talk more about that in a minute. Why it won't be fixed mostly is because you can't change demand. Demand is going to stay there. As I said, government needs people. We've got skill shortages. We need migrants to come and work here and pay taxes so we can pay our retirees. There's a number of reasons. But these are the key supply constraints. A lot of companies have fallen over. Perth is no exception. Perth has had a lot of home builders who have gone under. And so you can't just bring on new home builders with new skill sets and start building homes. What used to be, when we were selling in Perth, start with, they could actually do a house in 4 to 5 months. Now they're saying minimum 9 to 10 months. Okay. That's because of labor shortages, not so much materials anymore. Labor shortages is severe. So we have cost of construction going up, large delays in project completions because of that. Essential services. In Sydney, I know there is a significant problem in places like Austral, Leppington. Sydney Water cannot supply you quickly enough. So no point the council giving you a DA approval to start building. Without water and sewage, you can't. There's lack of developable land. This is not just a problem in Sydney, it's a problem in Perth, it's a problem everywhere, okay? You got to create more land. For land, you got to have services. And there's fewer building companies. This is an important graph. Dwellings approved. To fix the supply problem, what do we need? We need dwellings approved graph to go up. Guess what? It's coming down. Okay. Cost prohibitive for developers. Cost prohibitive for a lot of people. So their dwellings approval is going the wrong way, which means the supply issue will stay for a lot longer. So a few quick observations then. Housing supply will significantly lag demand, I think, for at least 5 to 10 years. Can't fix this kind of shortage so quickly. The rental crisis has had a bit of reprieve in the last 3-4 months. Okay. Little bit of reprieve. The national figure was about 1, slightly below 1. Now we're sort of back to about 1.3. Still a crisis. Still a crisis. So we will see pockets of rents actually still going up. Increased cost of construction, and the migration won't stop. increased cost of construction is going to cause more issues and more pain. And the price gap between houses and apartments, certainly true for Perth, is a different phenomenon because Perth does not have many apartments at all. And apartments have not been in vogue. So you'll be still catching up on the apartment side for quite some time to come. It's very hard when you go to Perth to spot an apartment building. And when you do spot one, it's only like 3 or 4 or 5 levels. So there's a long catch-up period, but it'll happen because house prices are going to become more and more unaffordable. And you're going to get a lot of housing suburbs, which are going to be $1 million plus soon. And that's when you'll see that the apartment builders will have no choice but to build apartments to cater for that demand. Then you've got the home value index here. This is a couple of months old, but the message hasn't changed. Message quite simply is Perth is outperforming the rest of Australia, by far outperforming the rest of Australia. This is insane. Okay. Insane, the last 12 months. And closely followed by Brisbane and Adelaide. Okay. We're sort of there. But if you saw the August numbers that came out yesterday, Melbourne and Tasmania, Victoria and Tasmania have both gone negative. Okay, they've gone negative. So it doesn't bode well for property prices in those two states or cities. So my gut feeling is that it won't recover quickly in those places. One of the reasons we've never sold in Tasmania or Melbourne is we thought there were better opportunities for our buyers elsewhere. And I don't think that has changed in my mind at all. And I don't think it will change for quite some time to come. There are tax issues. There are issues with Victoria in terms of their deficit in their budget. And they're going to bring more taxes, and it's easy to hit properties for taxes. So there's going to be no reprieve there. So Victorians are all moving to Adelaide and to Brisbane or Gold Coast. And that doesn't bode well for them. I mean, yes, they have population growth, don't get me wrong, but there's a number of factors why there are other better places to invest, and it's shown very clearly in here. Okay, vacancy rates, like I said, I mean, this is again a couple of months old, but the message is the same. National vacancy rate has gone up to 1.2 now. But look at where it's most chronic. Most chronic is here, Adelaide and Perth. Okay, has been for a while. Brisbane's improved a little. But the point is, where were we before COVID? Does anybody know? A healthy place to be is around that 2.6 to 2.9%. We're nowhere near that. Nowhere near that. We're less than half of that. So this is still chronic levels. This is chronic levels. As more people come in and the building dwellings do not come up, this figure will stay in check. It could go below 1 again. Okay. Now I'm gonna pretend like I am the Perth expert and actually talk a bit about what is happening in your state and city. So Perth used to be, so very quickly, Perth used to be a mining place. Still a mining place, but it was only talked about for its mining prowess. It's the biggest money spinner for Australian economy when it comes to our balance of payments. And they do all the exports into Southeast Asia. And it's a great place to export from there to all these countries you see here. Okay, 8 days, 9 days, you can be in China. If it was coming from Tasmania, it would take a lot longer. Even from Sydney, it would take a lot longer. So the point is, it's well positioned for trade, and it is doing a tremendous job in that space. But dare I say, mining is huge, and some of these figures will tell you mining is huge that I'm going to show you shortly. But it's no longer just a mining story. The biggest story now in Perth is supply and demand. Okay, when it comes to property prices, supply and demand is the biggest issue. Economy is robust and will remain robust until China stops importing iron ore and coal. But we got mining. Mining is huge. Then we got agriculture. There is some farms. There's a lot of farms in Western Australia which are bigger than countries in Europe. Okay, I'm talking about single farms here. And then there is manufacturing. There's a lot more emphasis on manufacturing, and more tourists are actually going there. So it's not a single industry. Mining is still the biggest. It's not a single industry phenomenon anymore. So this will tell you how much they're contributing to our economy. Massive. Okay. Massive. So if you look here, GDP growth, economic growth, China. Okay, this is some old numbers. But look at Western Australia. This is just Western Australia. Australia is down here. So you can see how much they're contributing to our economy. I won't go through all of this, but the point is, without Western Australia, our economy would definitely go backwards. So keep the good work going on the mining side. Okay, mining and resources contributes over 210 billion directly to the Australian economy, employs 149,000 people. That is massive. That is more than all of the big four banks added together. Does not equate to 149,000 people, okay? Has a pipeline of over 140 billion of major projects. That's huge. Then, as I said, you've got all of these other things, aquaculture. There is more happening in the food space. There is the dairy industry. There is all this other stuff that is starting to gain more momentum. I'll skip that one. It just shows that there is more connectivity now in Perth from up north all the way down south. In fact, the railway is actually going all the way up from Joondalup and goes all the way to Yanchep now. And then when you're going south, you can go all the way to Rockingham and then all the way to Mandurah. Okay. So the good thing about Perth is when you're going up and down, you're always very close to water. And that's what I love about Perth as well. It's actually fantastic. I do have a property in Perth, and it is very close to this Rockingham, a place called Lida near Kwinana. And I'm glad to hear that Kwinana's property price has gone up 30% in the last 12 months. Okay, so Perth, some quick facts. Demand for property is surging because of population growth. In a percentage terms, your population growth in the next 5 years is going to be higher than the population growth in Sydney and Melbourne in a percentage terms. Okay, that's important to note. Time in market 13 days. Things go on market, they sell straight away. You got a lot of investors as well. So won't dwell on that, as I said. Next decade, it'll be one of the fastest Australian cities. Okay. So if somebody says to you, listen, we've had a good run, property prices were 480. Now property prices have gone to, 680. We are done. Absolutely no chance. It's going to keep going. This run is going to keep going for the next 3 years, 4 years, 5 years. It's time for everyone listening here to take advantage of that. This is the hottest property market in Australia by far. Okay. So I won't go through that. Whenever you look at investment properties, you got to look at all of these things. Again, I won't run through all of them, but whenever you buy a property and whenever you're selling to someone, you got to concentrate on these 10 things. And if you tick 10 boxes, then 99% of the time you're making a good decision. Okay. I will stop there and I'll pass on to Krish.
Thanks, Sachin. Good evening, everyone. Hope you're all well. Look, tonight I'm just gonna I mean, obviously you guys are all from Perth, so what I wanted to touch on was the builders that we're working with in Perth. I have discussed this with some of you in the past via WhatsApp and on the phone, but I guess the situation in Perth at the moment and how we're dealing with our buyers over here in Sydney is if we have buyers who are investors, obviously everyone here is an investor basically buying in Perth. We sit down with them, we work out sort of what they're looking for in terms of budget, and then we, go to our two builders that we have, source land, package it up, and basically provide them with an investment property. So what I'll do is I'll touch on the two builders to start off. Now, this first builder here, this is Content Living, right? The builder's name is Content Living. Now, this is just to show you the packages we get as well. So when we get a package, within 24 to 36 hours, it's gone, right? So what we've got today will probably most likely be already gone, but we can source more as the opportunity arises, of course. So in terms of finishes, Content Living, they do 900 mil appliances. So they've got ducted air conditioning. They've got, double clay brick construction, as a lot of builders do in Perth. Landscape is included. It's a full turnkey package. So look, the long and short of it is they're a very good builder. They've been around for over 30 years. They are financially very viable as well. We had two of the guys come from Perth to Sydney a few weeks back, actually, and they are definitely in a growth phase. But one thing I will mention now is that sourcing land, as you guys must know, sourcing land in Perth is difficult, right? So for us, with our investors, a lot of the estates are saying we want to see a letter of eligibility and we want to see that it's an owner occupier, not an investor. So we're not letting in as many investors in, right? So, but with that being said, our builders such as Content Living have good relationship with the land developers there, such as Pete, who are some of the biggest land developer in WA. So we can still source land, is what I'm saying. So if you've got clients who have got land and looking for a builder, or looking for somewhere to live, we can source it, is what I'm saying. So that's a bit about content. So if we pop across to the next one, Sachin.
No, that's it.
Oh, that's it. Okay, sweet. That's all right.
I
So
kept
there's
it
another.
simple.
That's all right. Easy. There's another builder that we use as well. So on a very high level, guys, we've got Content
Can
Living.
open it up. I'll stop sharing.
That's all right. No problem. I'll talk through it. So we've got Content Living and we've got 101 Construction. Okay. So these are our two biggest builders that we use there. Now, we are very, very selective with who we work with, whether it be Brisbane, Perth, Adelaide. We make sure that we deal with, I guess, the best and negate as much risk as we can for our clients. So, for example, 101 Constructions, they're owned by the Sumitomo Group in Japan. So the Sumitomo Group are worth $1 trillion plus. Okay. So to be backed by someone of that scale is unheard of in Australia. That's bigger than Meriton, bigger than Mirvac, bigger than any of our builders that we can think of. So they've got good financial backing. They've been established for a very long time as well. And I guess we've built with them in the past. We've had good experiences. Our clients have had good experiences. And in a nutshell, look, they're two great builders, right? So we have sort of carefully selected two good builders. And I guess tonight's session, guys, I just wanted to open it up and say, if you've got clients who are looking, right, whether it be first time buyers, investors, whatever it may be, we can sit down with them, go through what their requirements are, then we can go and source it from these builders, right? So in the days where I can showcase 4 or 5 house and land packages in Perth and say, here it is, guys, go away, and if you like it, come back to me in a few days. It's not like that anymore, right? The market is that hot that we first screen the client, see how, I guess, serious they are, work out if they've got finance pre-approval, that sort of thing, budgets, and then we source it for you on a high level. So on a very high level, again, guys, that's what we're doing in Perth, and we would love to assist, be it investors or first-time buyers, to see if we can help you build your portfolio.
We'll open it up to any questions. Hopefully,
Yeah, please, guys.
hopefully
Open it up
was
to any
useful.
questions if you have.
Yeah. So I guess before I take the first question, And Nanette knows me well enough that I will always make some predictions. So my prediction for the day, okay, is that interest rates are going to fall in the US in about 10 days' time. And that will be a very big deal because I mean, the market is all saying it. So Krish will tell you that I've been saying it for the last 5 months that it's going to happen in mid-September. So it's all lined up for it to happen. When that happens, New Zealand, we know interest rates are already falling. UK, I mentioned. We are not ready yet. Unfortunately, we're not ready yet. Our inflation number is not gone down to the level that the RBA would like to see or anybody would like to see. So we really need that number to be closer to 3. That's number one. Number two, we want unemployment to tick up a bit. Unemployment is stubbornly low. I'd like to see it go up above 4.5. Okay, that's probably a better place for unemployment to be. So we're going to see a spike. Please, we need to lay off more people. It's a bad thing to say for a good outcome. And then the third one, I guess, is the GDP. The reason why we want GDP to slow down, we want the economy to slow down a little bit more. I mean, we're all feeling the pinch in our hip pocket, but we're still going out and spending money. So we need to tighten that. We're going to hide the credit card, and we're going to see some negative growth. Okay, 1/4 of negative growth is not going to kill us, but what it will do is actually it will prompt. If these three things lined up, it will definitely. And the fourth one is the U.S. rating decline. So the US might go September, they might do another one in October. Then we will start noticing a bit more. And that could push us over the edge, even if 2 of our 3 numbers line up. Okay. So this year, the chances of all these numbers lining up in the way that we would like to see it and the RBA would like to see it is quite slim for that to happen. Magic might happen, and you might get those numbers by end of October or early November. Then there's a slim chance. I give that chance about 15%, 10% to 15%. However, I give it a 90% chance of our first interest rate fall in February. January, there's no RBA meeting, but February meeting, and by then they will have enough evidence of what is going on. I think I put a 90% chance we will see a fall. Okay. And that is not gonna move the needle much. The 1/4% fall in variable rate is not gonna move the needle much on property prices. I'll tell you what will move the needle. If there's a 1/4% fall in the variable rate housing loan, there will more than likely be a 1% fall in the fixed rate housing loan. Okay, you've all recently seen the banks, nothing to do with the RBA. The banks have dropped their fixed rates from about 6.5, 6.6 to around 6%. I don't know if there's any mortgage brokers here, but you will all have seen that, and all the announcements came out. We moved 0.6%, not 0.25, 0.6 in one hit. Okay, so. And then some people who don't know what is going to happen next are going to run to the bank and say, hey, variable is at 6.5. I can fix mine at 6 now. That's great. Let me fix it now for 3 years. Please, please, please do not do that. Okay? Do not do that. Bear that pain. Bear that pain for another 6 months. Because when we have our first 1/4% cash rate drop, which means variable rate drop, fixed rates are going to drop 1%. Fixed rates are forward-looking. Okay? Fixed rates are forward-looking. Nothing to do with the RBA. So it's the 10-year bond rate. It's the 5-year bond rate. And it's the what we call interest rate swap rate, which is a derivative. They determine the fixed rates. Okay? Not the RBA. So if you fix now, you're going to cry in 6 months' time. Do not do that. Just wait. I would wait until middle of next year. Bear the pain for a little longer. then you will be fixing. If all of those ducks lined up, you're going to see maybe 3 rate falls between February and July, and the fixed rates have a good chance of having a 3 in front of it. Okay, a good chance. So please do not rush to the bank and do the silly thing. Wait. Tell your clients to wait. Don't rush. This is the start of the falling cycle. Okay. Interest rates don't fall just at 1/4%. No. When they start falling, it's the same thing when they go up. Quarter, 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 quarter. We're also going to have a quarter, 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 quarter. They might pause after 1 or 2 quarters, but it doesn't stop. It's like, so just keep that in mind. I will take questions now.
Feel free to ask anything, guys. As we always say, there's no such thing as any silly questions. So just fire away, whether it's a chat or anything you like.
Yeah, before my question, yeah, I'd just like to say thank you, Sachin and Chris, for arranging this. Really appreciate
No,
the effort.
our pleasure.
Most welcome.
Our pleasure.
Well, I guess my question is a timeless question. Obviously, as an investor or even as a buyer, you always think of when is the right time to buy
Now.
or
Mhm.
invest. Yeah,
It's always now.
yeah. I mean that's at the moment. Obviously, I'm continuously learning as well. As we got involved with real estate, and I do think that yeah, it's always the right time is always now. Obviously, you have to
No,
tick all
yeah.
the boxes and stuff like that. But just for the sake of the other people you're trying to educate as well, because some of them might think, oh, this interest rate is still high and they'll wait for
The
it to go
prices.
down. But obviously, as time goes by, the prices go up and they miss the bus already, something like that. So maybe you can shed some light on.
Yeah, no, listen, good question, very good question. And
Good question.
we do get that all the time. And it's not true that every single time it's a good time to buy. Sometimes it's good to wait, sometimes it's good to wait. So sometimes it just happens by luck. But right now is a good time to buy for a number of reasons. We are on the cusp, on the verge of rates going down. Rates have peaked. I think everybody accepts rates have peaked. So the next move in rate, be it in November, December, or February, is going to be down. Okay. Inflation will correct. Inflation has corrected rather quickly in some places. Like in the US, you saw 9 from 9 down to 3. And here it's going in the right direction. It's just been a little bit stubborn. We get a lot of migrants coming into our country, and they all come with money, and they all go to JB Hi-Fi and Harvey Norman and buy white goods and all of the things they need to dress up a house. So those things are propping the economy, where it is, right? But it will happen. So it's going to happen. So why now? Because you don't want to wait until rate starts falling, because when rates start falling next year, you are definitely going to see a spike in the house prices. So if you look at it like this: supply and demand stays where it is now. So supply will lag demand. Demand will continue to be high because we will keep getting people coming into Perth. They're not going to stop that. So when you, on the backdrop of that, the catalyst you need for prices to go up already is going up in Perth. So the builders we are talking to, they were in Sydney. They came to my seminar in Sydney, Krish, last month.
Yep.
A
Correct.
A month ago, I did a seminar on Perth.
Yeah.
And the 2 builders from Perth
Flew over.
they said, we want to come and join you, and they came and joined us. And they said there is no land.
Mm.
They're trying to change some of the laws there so that the what you buy there will be only for owner occupiers and not for investors. So they are trying to solve their own crisis by shoving us away. So, but our builders have been good enough to to sort of accommodate our clients at the moment. So they themselves are saying, go and buy a piece of land now that settles in 12 months' time. By the time you settle, you're going to be sitting on $70,000-$80,000 profit.
Conservatively, yeah.
Conservatively, right? So this is a crazy market, absolutely crazy market. So when you've got that market already there and no sight of any improvement, and you throw into it reductions in interest rate, well, I mean,
Just
you don't have
gonna
to
go
be, you don't have
nuts.
to be a rocket scientist to work it out. And that's why timing is of the essence. Okay. There's no need to wait. No need to wait in that kind of market. That does not hold true for every market in Australia. Okay. May not hold true. Because the type of increase, you got 25% increase in the last 12 months. Melbourne, as I said, has just gone backwards. Okay. So it's not true for all markets. Every city has some different peculiarities dictating the supply and demand, and dictated by lots of other things. But if you're looking for investors or your investors are looking to buy in Perth, please do not wait. Find a good property, get a good price, the best price you can get, and go for it. There's a question there from Jay.
Yep.
Will land developers allow us to buy land? Listen, if you're living in Perth, I'm sure you won't have a problem.
Yep.
If
Even
you are having a problem, then please talk to us.
see, even exactly right. So even in Perth at the moment, I mean, what's happening is there are releases happening, right? Even towards Mandurah and Lakelands and all that. There are releases happening. When a release happens, within a day, all the lots are gone. Right. So this is what we're being told by Content and 101. So the demand is through the roof. So people are waiting on registration lists, and you know, if their name gets called up, they'll get allocated and that sort of thing. But look, where we can source land for you, we will. But to be completely honest, the way that it's going at the moment, we're relying. Before it was a position where we used to speak to Pete, we used to get land and then package it up and sell it and that sort of thing. But now it's the builders who are getting preference, right? So we're lucky we've got two good builders. They can find land and sort of package it up with their product. But yeah, on the rare occasion, we might be able to find blocks. But as Sachin said, you're going to have a better crack being a local every day of the week. Yeah.
But if not, talk to us and we will try to source it for you.
100%. Yeah, definitely. Definitely.
Sorry,
For sure.
Chris and Sachin, just a follow-up question. You mentioned the first builder, so Content Living, I think, and Pete, the land developer.
Pete, yes.
Was that was that in Burns Beach, or is that further north?
Oh, look, Pete have got land all over Perth, all over sort of. But they're they're the biggest land developer in Perth. So Content Living and Pete. So basically, Content Living asked Pete, where are your next subdivisions happening? Can we get land? And sort of Pete will allocate X amount of land to the builder, and that it can be anywhere over Perth. That's what it is at the moment. So yeah. So
would you recommend dual occupancy builds? I mean, because you potentially have two streams of income, albeit higher capital. But is that something that you would normally recommend or go against?
No, look, we've done we've done a lot of dual keys in the past, right? So dual keys are a good investment vehicle. You can get a very good rental return from them. Obviously, because you've got the two dwellings. They've just got to be built right. Right, that's the most important thing. So you've got to make sure that your services are split up, so there's not one bill at the end of every 3 months where you've got to work out who pays what. So it's just got to be done nicely. And the good thing is the two builders that we work with, they do everything perfectly, right? So everything is above standard. You know, it's a turnkey package. So I guess yes, we do recommend it. One caveat, which I will say with dual keys, is this. The market for dual keys is hot, especially from people buying from eastern states, right? So what's happening is builders are adding a premium onto these dual key property prices, right? So sometimes what happens is the build cost for these dual keys can sometimes fall a little bit short with bank valuations. So maybe about 20 or 30 grand or something like that, because builders obviously put in their margins in there because They know how much rental yield clients are going to get, how much value they're going to get. So this is just what they do. So with any dual key, I tell all my buyers, please just err on the side of caution, because there could be an issue with the valuation with the dual key just for the build component. The land side of things always
That's a good
stacks
point.
up well. Yeah.
That's a good point. You got to watch the valuations. So work on a lower LVR,
Correct.
loan to value ratio.
Yep.
And only sell to people who have got a bit more
Equity.
cash or equity
Correct.
that they can put in if they have to, because you don't want to be caught out buying something for 750 or 800 and then finding that the valuation is coming 70,000-80,000 less.
Mm.
Then
It
you've
wouldn't
got
be
to,
that much, but
yeah, but I mean, I'm looking at the worst scenario,
Yeah, of course, of course.
and then you get caught up in that. So just be wary of that. But from what Christian's saying is, it's a great investment. The returns are really, really good.
Yeah, returns are
We
amazing.
were selling a year ago. We were selling dual keys for about 680, and the
Oh,
rent,
those 650 in where was it? Dawesville.
yeah,
Dawesville,
and the
650.
rents were 900 to 950.
Yeah. Yeah.
So now those prices have gone up, and I was like yelling to people in my seminars a year ago. Christian will tell you that you just write it down now that it can't be sustained, and that your price will go up 100,000 in 12 months. You cannot be sustained, and it has happened.
And we've got emails from clients saying, thank you so much. Before settlement, property price has gone up 90, 100, 110 grand in some instances, because they bought land which is registering a bit later, right? So it's definitely a good product, and there's
It's a
definitely
no-brainer. It's a no-brainer. I mean, the risk, there is, I can't think of any risk for investing in the right place at the right price right now in Perth. There's a zero risk.
Yep.
A negligible risk. There's never zero risk, but negligible risk.
Yeah, yeah. Now, what I'll go just quickly about the dual keys again. With the dual keys, if you've got a bit of buffer, if you've got equity, I tell all my clients, then go for it, right? If your budget is tight, and let's say 800K for the dual key, and your loan is 800K, and you don't have a dollar more, and that includes a deposit and all that, I say don't do it, because you just don't have the capacity, don't have the buffer. Get a single occupancy home. That way you'll still get a good rent, right? But you're not going to overstretch yourself, and there won't be those valuation issues. So yeah. And that's in any state across Australia. That same principle applies with dual key.
Thank you.
That's okay. No worries. Thank you.
I have another question, but I think you've already answered that. I was just going to ask the just the main difference between buying established and versus a package and
Yep.
to build home house
Yep.
and then
Brad, so basically building a home versus an established. Yeah. It's a good question. Brilliant question. So look, what's been happening, I'll give it from the perspective of eastern states, right? So from the east, obviously there's been a lot of buyers agents going to Perth, going to Brisbane, trying to source these secondhand properties, right, for their clients. What's starting to happen is the volume of that stock is starting to get, it's getting less and less, right? So what happens is a buyer's agent from Sydney will speak to an agent in Perth. So can you send me some off-market opportunities for my clients? And then now what's happening is these agents in Perth are saying, we don't need you. We've got enough demand here locally, and they're not getting their stock, basically, right? So what's happening in the existing space is that, and you guys would probably know this, obviously open homes are going crazy, things are selling very quickly, prices are going up very quickly as well, right? Where the eyes haven't been on as hard has been the brand new space, the house and land space, because everyone's just been focused on the established market, right? So in the established market, if you can find something good there, 100%, in my mind, if it's a good area, a good location, everything, jump on it. There's no question. I mean, it's still not a bad thing to get into an established property. However, if there are, I guess, if you're open to looking around, if you've been priced out of all of the established homes, then house and land brand new also has a lot of benefits. You've got things like your depreciation, which is going to be huge because it's brand new. What normally happens is these estates are all new estates. So you've got new new, white collar demographics moving in. So you could have one big suburb where it could have one half of, well, say hypothetically, one half are all established homes, then the other half are all brand new estates. What happens is those new estates generally attract a better premium in price and a better demographic as well, right? So, but with that being said, there is also, arguments against that, where there are established suburb where there's no other land to build new houses and it's a premium suburb. And if you can get in there, then 100%. So on a very high level, you're winning on both ends, whether it's brand new or secondhand. It just depends on your situation. And we can discuss that. And we've told our clients in the past, I mean, we've had clients come to us and say, Krish, I've got the house and land here in Eglinton. It's ready to go, and I look at it. And if it's a good buy, I say, go for it. We're not here to hold you hostage or anything. We're not charging any fees and things like that. So, we'll be very honest with you and say, just, go for it.
think there's so a couple more things to add to what Christian said is, so you can buy, when you buy a land and build a house, you only pay stamp duty on the land.
Oh, yes, correct. Sorry. Yep.
So no, you raised all the good points. So that's a consideration. That's a consideration for people. Depreciation, Krish has already mentioned. Of course, in a new house, you've got, at least I know in the Eastern Seaboard, mostly it's 7 to 8 year warranty. And so you've got sort of a free mind in terms of anything that might go wrong with the place. You've got some warranty there. And the maintenance will be of course, for a new house, the maintenance is a lot lower in your earlier years. You buy a second-hand property as an investment, as I did in Kwinana, and I've had it for more than 7 or 8 years now. There's always something going wrong, whether it's the new oven or new cooktop or the underground water pump to irrigate your lawns has just broken, and that's another $1,000. So something always goes wrong. There's maintenance of something happening, right? So you just got to weigh all of these things. I mean, I've done a presentation in the past of old versus new and the pros and cons.
Okay.
And we can share that with you. Sorry. Okay. Does that answer your question? Is that, I mean, but if your price differential between an older property, maybe 5 years old to a brand new, is not much, the differential is not much, then definitely you'll go for a new property.
100%.
Just weigh the age of the property, weigh in the, do your financial feasibility on both. The other good thing about new is you got choice, you got things close to beaches and stuff, which gives you lifestyle. I mean, some of these, I think, staying in Sydney, and you sometimes I feel like buying in Mandurah or Lakeland. Is
Lakelands.
Lakelands. The golf course is there, the beach is there, the water is there. I mean, it's a great lifestyle choice for something you'd pay $2.5–3 million in Sydney. You can take it there for 700,000 or 800,000. So
yeah, could be a better option than the Gold Coast. That's for retirement. That's for sure.
Correct.
So
we'll take one or two more questions, maybe.
Yep. 1 or 2 more questions. So what other locations in Perth can your builder offer that have house and land? Okay. It comes down to this basically. So it's wherever there's greenfield sites. So wherever there is new land available, right? Wherever there are new estates, that's where our builder can get access. So what I'd love from you guys is that if you are looking yourself, or if you've got clients who are looking, just give me a call or get in touch with me on WhatsApp. Then I can basically sit down, work out where you're looking, where you're comfortable, what your budget is, and then we can source it accordingly with the builders. The same way we're doing it in Sydney, I'll do it with you guys as well. So on a very high level, we can source land all over Perth, wherever there is land available, basically.
Mm-hmm.
I hope that helps. Yeah. Now, thank you, Ed. I appreciate that. And Che, thank you, Sachin. No, I've seen a lot of thank yous, and we really appreciate your time, guys. And no, I'm glad that we did get to have a chat, which is good. And I'm on the WhatsApp. Sachin isn't on the WhatsApp because he's quite flat out, but I'll be on the WhatsApp. And if you want to relay any information or ask me any questions, I can answer them. I can get Sachin to answer them. We can do one-on-one sessions with people, do more group sessions, whatever you need. Absolutely anything.
Hi, last question.
Yeah,
So
no
the
worries.
Turax properties, how long did it take for them to?
Sorry.
Because you sent us the Turax property
Yep.
properties. How long did it take for them
To sell those 4, they're all sold within 3 days. So that's the thing. So they're all went pretty quick. But what he said, so I spoke to him today. I said, look, can you get more? And he said, look, just provide the examples that we've given as an example, right? This is how we're doing it now. So all the stock that I'm getting, they're saying if it's gone, it's gone. But if clients do like that, we'll try and source something in the same estate. It might not be now, but what's happening is the land registrations are now pushing out further and further, right? So in places like Eglinton now, I think they're pushing out to about June next year, land registration, meaning you can't start to build until that time next year. But with that said, we can get it, and we do get preferential treatment because of our builders, basically. So yeah.
Oh, thanks. Yeah, because we actually inquired at Eglinton last year.
Ah, nice.
They're all expression of interest. They get your info and then
Oh, that's it. And I mean, they'll release 15 lots, and they'll have like 200 people on the EOI, right? So I'm like, how do you guys choose? It's the first 15 that come. I go, okay. I'm sure it's friends and whatever. But anyway, whatever it may be, they're in a position where sort of they can pick and choose, but we're as good as it gets when it comes to sourcing it. So yeah.
oh, thanks so much.
No worries. Thank you. All right, guys, we'll leave it there because it's coming up to about almost 10:30 on our end. So I'm gonna we'll take any other questions offline. Call me, message me, WhatsApp me, whatever you need.
Hey
Yeah,
guys,
sure.
Sachin and Krish.
Yeah,
Oh.
thank you again, Sachin, Chris, and we'll keep in touch. Chris,
No
you, guys.
problem. Thank you. Thanks for your time.
Thank you.
Sachin, thank you
Thank
so
you.
much, Chris. Appreciate Cherry and
Thanks.
Michael for helping organizing this meeting. We need to hear you regularly, Sachin. Appreciate that very, very much.
You're
And then Chris,
welcome.
thank you for populating that chat room with our Perth group.
No problem.
Putting more stocks there, huh?
Yeah. Yep. 100%.
Yeah,
Look at that
yeah.
little cutie. Oh my
Yeah,
goodness.
look at my first grandkid. That's why I said, oh, I don't want to share, but anyhow, it's good time night. I'm still here.
So cute.
Hello.
Adorable.
You have to go to sleep now.
Yeah. All right.
Okay, thank you so much.
Thank you, everyone.
you,
Thank
guys.
you.
Come
Take
Have a
care.
lovely
Have a
evening.
good
Thank you.
evening.
Bye-bye.
Bye bye.
Bye.
Take
Thank
care.
you, everyone. Thank you.
Thank you.
Thanks.